Kirk, it's always good to have you on the program. But you said that markets held up a little bit better than expected, especially when you look at U.S. stock futures yesterday. What do you think happened in the session? What's the mindset of investors right now?
Well, I think investors are pretty calm. You know, the market was down something like 88 points, in the big market. And I think that folks view this as a political crisis and not as a solvency crisis. So I've been very pleased. I think the markets have reacted very calmly.
Well, let me just ask you, what is behind the calmness? Because taking a look at the volumes, you could call it a low-volume session. So would you say investors are just standing on the sidelines right now, sitting on their cash, waiting for some sort of agreement in D.C. before they'll move into the markets?
Yes, I also think that investors think there will not be a default. There'll be some kind of agreement. You know, I do think that investors are hoping there will be some kind of grand bargain in the $3 to $4 trillion range, and I think everyone is waiting to see what happens.
Yeah, that $4 trillion bargain seems to be off the table at this point when you have these rival plans coming from Democrats and Republicans. Let me just go through some of these numbers with you, Kirk. Do you have any preference in terms of what Boehner's coming up with, which is a $1 trillion plan, or cutting spending by, say, $1.6 trillion, while the Democrats are looking for $2.4 trillion or around that number? Any preference to you as an investor?
I don't have any preference, but I do hope there's some kind of settlement. I mean, I think the rating agencies have signaled that absent a $3 to $4 trillion agreement, that the U.S. debt will probably be downgraded to AA, which is not something that pleases any of us. Essentially, if you think about a downgrade, it's essentially a capital charge on the U.S. system, which I don't think is good for anyone.
And August 2nd is just around the corner. I mean, some people are saying, you know, in order to dot the I's, cross the T's, it takes a lot longer than just a week. So let's get this done as soon as we can.
Absolutely. I mean, my view is get this done as quickly as we can. I will tell you this. I think if there is some kind of agreement in the $3 to $4 trillion range, although it doesn't look likely, I think the markets would actually do very well. I think revenues would go up, and I think the tax revenues would go up. So the irony of this whole thing is if they could work this out and get a significant agreement, I think it would be very positive for the government, be very positive for revenues. I think it would go a long way to address a lot of the deficit problems.
And it seems that this debt debate is really overshadowing the corporate earnings season so far, which some are saying has been pretty good. It shows that corporates are earning a lot of money still, even with so much cash on the balance sheet. Kirk, your read on the numbers that you've seen so far?
I think corporate earnings have been very strong, especially at the big multinationals. So I would recommend the big multinationals, especially with the weakening dollar. And I think that, again, corporate profits have been pretty strong. So, again, my hope is that we can get through this period, get through this mess, and then the fall will be pretty strong.
The fall will be pretty strong. Can you give me a number as to how strong the fall will be?
I would hope, again, I think if we can get through this and have some substances, addressing the deficit, that the equity markets could be up as high as 10 or 20% higher in the fall.
Wow.
But again, if it's just a Band-Aid fix and temporarily, fixing and just servicing debt short term, and there's no real substantive agreement, my prediction would be off the table. But again, I think if there's a good large number on the table in the $3 to $4 trillion range, I think the markets will react very strongly.
Wow, 10 to 20%. Kirk, that's really bullish. Before I let you go, do you have any concerns about what happened with Moody's yesterday, downgrading Greece's debt, which is just about 2 notches away from default levels? In fact, Moody's saying it is basically like a partial default. Any concerns there?
Well, we're, of course, concerned about the Greece and the European banks, so that will continue to be a concern. But I am glad that the European Stability Fund and, the governments are addressing the issue. We're certainly a long way from a solution, but, I look at it this way. The first thing you have to do when you have a problem is to admit you have a problem and then address the problem. And I think both in Europe and in the United States, the silver lining is that people realize there's a significant problem, and hopefully they'll do something to address it.